Well, we're in a risk-off market, and I'm a guy, among other things, who likes some risky assets. If there's a situation where there's an asset class that I like, junior resource stocks is an example, or emerging and frontier market stocks, where the overwhelming sentiment is negative. What that means is that sectors that I know extremely well are going to go from cheap to extremely cheap. You won't feel necessarily very good about your existing inventory, but to the extent that you add inventory, you're going to feel fantastic about it. But I said paradoxically that although I cut my teeth and had my expertise in small cap and micro cap stocks, that they were overvalued relative to large cap and mid cap stocks. That's changing, and it's changing very, very, very rapidly. So we're coming into a circumstance where the expertise that I built up over 50 years of investing and speculating is those lessons are going to be lessons that I'm able to employ, which is extremely attractive to me. Volatility unnerves most people because most people only pay attention to the price of their investments. That price information isn't worth anything if you don't have a sense of value. In other words, if a stock is selling for $1, what does that mean? If you think it's worth $2, then the fact that it's selling for $1 is cheap. If you think it's worth 50 cents, then the fact that it's selling for $1 makes it expensive. Most people pay slavish attention to price information and have no opinion whatsoever as to value. So, of course, during periods of volatility, those people that don't have the courage of their convictions, because they don't have convictions, will make mistakes. And those mistakes will inure to the benefit of people who are psychologically and financially prepared. And I'm hoping I'm both. I think the funny money game can continue for a fairly substantial period of time. I don't think that the average investor and saver in the United States is as afraid as he or she is going to become. I believe that most people still believe that the big thinkers have their back. I'm not sure that I believe they have my back, but that doesn't matter. I don't make a market. I think in the very near term, we're probably set up for a technical rebound. I think equities are oversold. I think bonds may be oversold because although I think they offer a horrific value proposition, they are regarded by other people as safe havens, irrespective of the arithmetic. So I think in the very near term, we may see a rally. To me, that feels like a sucker rally. Higher interest rates do two very bad things to debt and equity markets. The first is that they raise the issuer's cost of capital. You know, if you're somebody paying the prime rate and the prime rate is 3, your cost of funds is 3. And if the prime rate goes to 4, your cost of funds went up by 33%. Obviously, your margin is the difference between your costs, including the cost of capital, and what you sell your product for. But the other thing that increasing interest rates do is they reduce the value of existing income streams. So if you own a U.S. 10-year Treasury, which you bought a year ago with 125 basis point yield, and today the U.S. 10-year Treasury is selling for a 225 basis point yield, over 10 years, what that means is that your income stream is worth substantially less. Similarly, if competing savings products begin to yield appreciably more than the dividend yield of the S&P 500, as an example, there's going to be disintermediation by income investors from equities and from bond funds into other deposit products. So clearly, if you believe that interest rates are going to continue to rise, in the intermediate term, you believe that long-term bond markets and conventional equity markets are going to continue to suffer. I hate to sound arrogant, but I think focusing on when misses the point simply because you'll never know when. I think what you have to do is you have to live your life with the sense that there is no necessary answer to the when question. And you have to conduct your life in prudent fashion. Despite the fact that you lose money having cash, you have to have some cash because cash will give you the tools and the courage to handle volatility. It sounds counterintuitive when you understand that cash is costing you money, but there's an opportunity cost associated with having cash. In a risk-off environment, the price of asset classes which you would normally want to hold for the next 5 years, which is to say precious metals as an example, gold and silver, get soft. And if you don't have the courage of your conviction, it's easy when the gold price falls from 1900 to 1800 saying it's going down and selling it, really truly snatching defeat from the jaws of victory, mistaking volatility for arithmetic, which is a mistake. Similarly, if the S&P 500 is going lower, but if you have specific knowledge around a company and why that company is attractively priced, the fact that a company, that is to say an investment that you know well and feel good about, is becoming less and less expensive is a benefit to you.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race, you're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dahn, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I intend, how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dahn.